Welcome back to Your Average Investor. We're going to be talking about GameStop again today, as well as AMC. And I'm going to show you the two most important indicators, in my opinion, if you're looking to buy in the dip on GameStop and AMC from a technical perspective. I'll show you the two indicators that I think are most important. The first of which is what's called a volume shelf or volume profile, depending on what platform you're using. If you're in Thinkorswim, it's a volume profile. If you're using TrendSpider, it's sometimes called a volume shelf. Now, what this represents is the number of people that purchased at that level of the price of the underlying security. So here's GameStop, right? And you can see here this little tiny bar. That's representative of the number of people that purchased shares up at this price. And then you can see how far out the bar goes here, where down here the bar is all the way to the end. So at $10 per share, which if we're thinking back historically, that would have been equivalent to roughly $40 per share because of the 4-for-1 stock split. That is where there is a significant amount of volume of people that have purchased, and that's due primarily right here to this big dip after the initial push. There was a surge of volume. Look at that volume, 600 million shares purchased on one day, and that pushes this volume shelf way out. Now, I've intentionally adjusted the chart to only include data from 2021 and forward, because that's when the GameStop thesis really started taking off, and data prior to that is going to be irrelevant to what we're talking about today. So this is all the surge of people that bought in from meme stock mania, if you want to call it that, or if you want to call it due diligence based on shorts, over leveraging and going 100% short or more on the float of GameStop. So that's indicator number one. The reason I love it is it shows me where there's a significant amount of buying interest. So right here at 10 bucks a share, there's a ton of buying interest here. Now, if we look at these other volume shelves, there's another little shelf here at $15 that goes out pretty far. Another one here about $24 that goes out pretty far, and then more about $33 to $37. And we don't really have many big shelves after that, right? On the really high peaks, there's not nearly as much volume of people buying GameStop. And you can see if I pull this volume graph up a little bit, you can see that's reflective, right? If you look back here, look at that surge of volume in the lower price here, and look at the surge of volume here on these prices before the most massive of days, right? In the most massive of days, of course, there were a couple days of high trading volume up there, but because the buy button was turned off during those days, it turned into only selling. In my opinion, illegally, and unfortunately, that buy button was turned off. It artificially killed the demand side of the equation of supply and demand, which artificially dropped the price back down prematurely. Regardless of that, though, the second most important indicator is the volume weighted average price anchored to certain highs and lows. And that's what you see here in these red lines, is the volume weighted average price anchored to highs. And that's what you see in these green lines, is the volume weighted average price anchored to lows. Each arrow is just representative of where I have a new VWAP starting. So you can see in this case, I've started a volume weighted average based on this candle here, so that starts right there. And what I want to show you with this is how price tends to bounce off of the volume weighted average when it's anchored to highs and lows. So here you can see I've got it anchored down here, and we've got a nice move up where the price bounces, another time here, and a third time here. It doesn't always work. You can see here that it cuts through, but then on the upside too, if we're in a downtrend, look at this. So we start a volume weighted here, moves up and cuts down. Here it cuts above for a little bit, but then moves back down. We establish a new one, bounces down. Again, it cuts above here, but then we've got a nice downward trend happening, and the price continues to bounce and oscillate between bounces off of these lower ones that represent volume weighted average anchored to this low, and these high, and you get these little squeezes that happen before the price breaks out one way or the other. Again, not a perfect indicator, but it does usually show some interesting potential bounce levels, especially when combined with other indicators, such as the volume shelf. And other than that, the only other thing I want to do is I want to draw a few price lines here to important price levels. We've already got one here at like 10 bucks a share, because that's like, in my mind, that is the do or die, right? You can see GameStop, and I'll have to take off, let me take that off. You guys understand well, I'll leave it on, but let me go like this. well, that's not going to work. But right, if GameStop convincingly broke below this line, that's going to be a world of pain as the shorts continue to get their way. But it didn't. It held quite well. And look what's happening here. If we've got a new volume weighted average that's starting right here, and it looks like the price is coming back to touch it right there at 25. So I'm going to add a price line here at about 25.5, and watch what happens when I extend this price line out to the other direction. So I'm going to turn left extension on so it extends back out the other way, and we're going to just zoom out. And look at how cleanly this intersects with a lot of these lows. Not perfectly, right? But you've got this little area here. You've got, it dips below for a bit here, but then again right here. This whole area where it bases here. So we've got a nice long volume shelf. Big volume shelf where lots of volume was purchased. And same thing is happening right here, right? You can see we're looking at maybe a potential bounce off of the volume weighted here. So this is my first zone where I'm interested in buying the dip on GameStop, is right around $26 per share, and looking for a bounce back up into the 40s, 50s, 60s, somewhere in that range with a nice trailing stop. Now the other way that I'm looking at it is if it doesn't hold this volume weighted at all, if it just cuts right beneath it, then I'm going to say, okay, what are the other levels that there was a nice price volume shelf and also the price seemed to be bouncing off of in the past, and we're just going to add a nice little line. Let me add another drawing here. We're going to add another price line, and you can see right here at about $19, $19.50 a share, nice two bounces here, kind of cuts down for a little bit, but attempts to bounce off a lot of times in that area and comes back above before this final time where it cut below and continued to sell off. So I could maybe even take this line and bring it down here for these two bounces at like $16 a share. And this is the most interesting level if it continues to sell off. $16 a share I think is an incredible bounce opportunity. I'll definitely be buying more GameStop at $16 a share. I'll probably be buying it at $26 a share with a very tight stop loss, and then maybe at $20 a share or in that range too. Again, $10 a share is a no-brainer in my mind from a technical analysis. It's, you know, this is my opinion only. Do your own research and don't take this as financial advice. Let's pop over real quick though and let's look at GameStop. Excuse me, AMC. We'll come back to GameStop in just a minute though. So I want to look at AMC with the same thing. We're going to look at the volume shelf here, which you can see like the no other price point even comes close to this volume shelf here at like the 2 to 4 range, and it's because of how, like, if I drag this this up, look at this, right? You've got this big surge of volume here, big surge here, and then just massive volume ever since the 10-for-1 split. And my guess is part of the reason for that is even though this is a reverse stock split, even though they had the reverse stock split that retroactively changed the price, I don't know if it actually multiplied the volume by 10, meaning on this day this would have only been worth $72, and I don't know if there was actually 79 million shares traded, or if they went back and retroactively like multiplied it by 10 because of the reverse stock split. I know the price has done that. I just don't know if the same has happened to the volume, and so I'm not sure that information is totally reliable. But if they haven't, then probably this area right here at $56 is a very interesting level to pay attention to, because there's a big volume shelf right there. So I'm going to add a price line to that volume shelf, so you can see right there about $56 per share. And then I would say there's probably another one right here at like $140 per share. Now these prices sound absurd for AMC if you've just gotten into it, but again, remember, reverse stock split, that would have been $14 a share, and this would have been $5.50 a share respectively, $5.50 and $14 respectively. So it sounds absurd if you're just getting it now, going like, you know, AMC, why would AMC ever be worth $726 a share? They're just a movie theater company. Well, it's because they did a reverse stock split, and so it looks absurd, but it doesn't change the market cap. So we're going to zoom in a little bit, but before we do that, I'm going to kill these price lines now because it's not super... Well, actually, let me do one more with AMC. What I'm going to do, actually, I'm going to drag the time frame in. We're going to go to a 1 year, 1 day, just so we can see the last year. So this is going to exclude all data prior to right here from the perspective of this volume chart. And you can see again, right, Volume between $3 and $4 a share, super, super big. Not a lot of volume here. This is a big, what I'd call big volume gap where the price kind of just boom, 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 fell down. And so what's interesting to me about that is if AMC can happen to break this area of like $16 and start pushing for these gap fills and these volume gaps, I think there's a very strong chance that it pushes all the way up to $40 a share and then finds strong resistance there, right? That'd represent almost a 10 bagger opportunity. Possibly we get up to like $60 a share at those other price levels we were looking at, but you know, maybe not. We'll see. So let's take this in a little bit closer. I want to look just at the last 6 months because this is going to show us since that reverse stock split. And you know what? Actually, let me drag it out. Let me see if I can drag it out to 9 months if that gives me what I want. That's a little bit more than I want because it's just before the reverse stock split, but not too bad. So this is good, right? Just before the reverse stock split. This is mostly what I'm interested in seeing. So you can see there's a lot of support at this $7 to $8 zone that it pops up off of, and then it cuts down below and it just kind of dies from there until most recently. But look at this volume. This is the absurd thing, right? This volume, I mean, if you compare this volume to prior, this volume is absurdly high. This is even more so on top of it. I mean, it's just volume on steroids. 650 million in a day. We had 500 million here, 300 million, even 100 million today. So you can see the volume's calming back down as that initial burst is going down. But this would be the opportunity, in my opinion, to start accumulating shares. I'm going to be looking at accumulating probably another double or triple of my current position, which is not large. I only own 200 shares right now. But I'm going to look at double, triple that because I think that this is a nice accumulation zone. And I think that there's a good chance that the price pops back up to this $8 to $10 range again based on this volume shelf right here. Now, if it happens to go crazy, there's even more upside, but that 8 to 10 range I think is realistic. So what I'm planning on doing is buying shares here, accumulating, selling covered calls when it pops here, maybe keeping like 100 shares that I don't sell a covered call on just in case, but selling those covered calls to continue to reduce my risk in the position. So I like it for that reason, and we're going to take the volume profile off now because it kind of messes with the charts when you're zooming in and the volume profile is still there. So look at this. This is the other thing that's interesting. Volume weighted average price anchored here. Look what we've got, about 4.3, and we're just about there, maybe another 30 cents, you know, a few 4 or 5 more % down, and we hit this this VWAP line. So we're going to zoom out again and look at VWAP in the past so you can see how this has been for predicting bounce levels, just like with GameStop, right? So here, volume weighted average, bounce, bounce, cuts below for a little bit, and then kind of comes back up, but then we'll establish a new one here, bounce, bounce, and then finally here it breaks, and in a downtrend it starts more respecting these top ones, right? Comes down and up, so it can tell you maybe a potential zone to sell at if you're going long. But look at these, bounce, bounce. It does okay, doesn't do phenomenal. Of course, certain things like dramatically will invalidate this, like when I think this surge right here, the CEO announced that they were selling shares on the market, and that just caused a massive drop. Like he took that as an opportunity to sell shares and pay down company debt. He's done that a few times. He has a big history of doing that. People are really frustrated with it. But even in spite of that, right, these tend to be pretty good zones that you can play off of. And we have a whole video out about how to use the volume weighted average price as an indicator if you're interested in that video. I'll put it at the end of this one. And even more recently, right, with the reverse stock split, we'll just look here, right, you can see that right down here, the volume weighted average anchored to this low, it served as an okay place to start accumulating shares. It did eventually cut down though, so it ended up not bouncing up, but it's working okay. It's not my favorite indicator for this chart, but it's okay. Coupled though with that volume shelf, right, the volume shelf just piercing this $4 area. There is so much volume in $4. It seems like that's an incredibly safe place to continue to accumulate shares at. I don't know if we're going to see a low like this again unless it's imminent that the company is bankrupting. And even then, there's been a history in the stock market recently of companies declaring bankruptcy and then the price of the share skyrockets. I'll show you an example, NCMI. So they were going along, not doing anything, and literally what happened is they announced that they were bankrupting. And the price went from, I think they've done a reverse stock split, so it was like 13 cents up to 65 cents or something like that. But now, $1.30 to 6.5. And the reason why that was seen as bullish, Hertz did the same things, by the way, Hertz Car Rental. The reason it was seen as bullish is because if they have a lot of debt and they're going to declare bankruptcy, all of a sudden the lenders go, whoa, 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 we can renegotiate with you. We'll give you better rates, we'll give you better deals, but we need that debt paid back, right? The whole thing, like if you owe the bank $10,000, that's your problem. If you owe the bank $1 million, that's the bank's, or $1 billion, that's the bank's problem. And in the case of AMC, they owe the bank a lot of money, and obviously them going into bankruptcy is not going to help get that debt paid off. And so there's a case to be made for that. Of course, you have to be careful. If the stock drops below a buck per share, they're going to be at risk of being delisted, which is perhaps why they did the reverse stock split prematurely. But they could do that again, and then of course that could lead to even further negative downside for the stock. But looking interesting from that perspective. One more thing I wanted to look at. I wanted to go back to GameStop real quick so we could view it without the volume shelf and zoom in here, right? So we already showed this again. We're coming in on this potential zone here at $25. We've talked about this zone. Let me show you one more thing on the short-term charts, and I'm gonna have to edit this just a little bit, so bear with me as I change this. I want this to show me a 10% above and a 10% below band instead of where I have it right now. So here's the 10% above, 10% below band. This purple line, what this represents is the volume weighted average price anchored to the start of the day. And right now I have the start of the day including pre-market hours. You can also anchor it to start at the very beginning of the normal trading hours. But check this out. So the price pretty frequently, if you're looking at scalping, which might be worth doing, or looking to find a really good entry on something like GameStop, you could say, okay, this minus 10% from the volume weighted average, it tends to come back up a little bit off of that. So maybe tomorrow at open, I look for minus 10%, depending where it is. But I mean, again, look at this. We're coming right up on my price target here of 25.5 bucks. As a reminder of where that comes from, that's from one of the big volume shelves and then these support zones, right? So the volume shelf I turned off already, but these support zones, and then they turned into resistance zones. But we're coming right back up on that. And because there's a lot of volume there and it's historically acted as support, and it's converging right here with the volume weighted average price, I think it's a phenomenal place to play a bounce. And I would do it with a relatively tight stop loss. I'd probably set my stop loss for somewhere like 24.7, just in case we come down and fill this gap here. But that's what I'm looking at right now. Again, the two most useful indicators for this are volume profile and volume weighted average price, as well as just your traditional straight lines that are going to show you where have people historically been buying and where have they historically been selling. Hope you enjoyed this video. Please drop in the comments below if you have any other ways that you're looking to trade AMC and GameStop. If you're just a diamond hands that just buys, DCA down, good for you. Not my recommendation necessarily, but I do think that there's something to be said of corrupt institutions manipulating the price of equities in order to bail themselves out of poor short positions. So that being said, sayonara everybody. I'll be buying some more shares at my price levels. Love to hear what you're doing. Catch you next time.